Oh boy, here we go again. Back to work here. Hope you guys had a great weekend. Second week of January is here. It's time to make some money here this week. It's Monday evening, after all. It is the 10th day of January 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades. Setting up for Tuesday's trading session, I got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the S&P, got the Nasdaq, and we got the oil on our radar for tomorrow. Speaking of tomorrow, got some big news tomorrow, right in the middle of the session. We'll talk about how to trade around that news. And boy, I'll tell you, for how the day began today, everything looks pretty bullish, right? Got a remarkable recovery on the S&P and the Nasdaq. And even though that oil kept on ticking lower here today, it still looks like those buyers have the big opportunity on the oil for tomorrow. Got a bunch of good trades on my radar, and in tonight's video, we'll talk my favorite trades for tomorrow. I'll also talk about some stuff to avoid, some traps to avoid to keep yourself out of trouble and keep yourself in the green, whether or not you're trading on your own or you're trading with us in our morning trading session. I got a lot to cover tonight. Before we jump into the video, though, and get into these charts, make sure you subscribe to our YouTube channel. I publish this video every evening, my best trade ideas. I don't want you to miss tomorrow night's video. A lot of this stuff is time sensitive, so hit that little bell icon when you do. Also, if you guys have any questions, I'm going to be using a lot of different terminology in this video. If you guys have any questions, definitely drop questions in the comment section below. And if you enjoy this video as much as I enjoy making it, do me a favor, hit that like button for me tonight on this YouTube video. Appreciate you guys carving out some time with me here after the weekend. So let's get right into it here tonight. Tuesday is right around the corner. Like I said earlier, for the way the day began, tomorrow looks pretty darn bullish, right? As we go into Tuesday's trading session, got this big run higher here on the S&P, big run higher here, right, on the Nasdaq, and we're all coiled up right now on the oil. But I'll tell you right now, it's difficult to want to be a seller on the oil right now. I'll talk about why I say that as we go deeper into this video right now. But I'd love to look for a nice rip, going higher here. So we definitely have some buy setups on our radar. I wouldn't completely count out the sellers, especially on the Eminis, because we had those big moves down at the beginning of the day today, and you guys know by now, right? Anytime we see a strong move down like that, there's a big bullseye right on those lows here too. So I'm definitely going to talk about some reversals. We'll talk about how to tell the difference between a reversal and a pullback. So I'm going to cover all those details as we go deeper into this video here tonight. Now tomorrow, let's make sure we get on the same page here. We're going to jump into charts here in a second or two here. Before we do that, though, let's just make sure we're all on the same page, because tomorrow's one of those days. Tomorrow we got Jerome Powell back on the microphone. Now, he just released his testimony tonight. So in case you're unaware of this, a couple times a year, right, Jerome Powell, he's the head of the Federal Reserve Bank here in the U.S., a couple times a year, he'll get dragged in front of Congress, right? He'll get asked a bunch of questions and he'll have to answer them, right? He prepares a statement that he releases the night before. So we have all, you can go on, search the Federal Reserve website. You can see a statement right now. Not a lot of new stuff came out in that statement this afternoon. And honestly, the statement itself is not really the big thing, what you want to think about for tomorrow. What happens a lot of time is the markets will really become a bee's nest around his testimony. Even though everybody sees his testimony ahead of time, we oftentimes get a lot of, choppy, really rocky price action around that 10 a.m. testimony tomorrow. So what I always used to do is, whenever I have one of those kind of semi-annual testimonies, I want to go in and find my trades either early or find my trades late. Oftentimes, the easiest money to make is going to be in that, kind of 10:30 to 11:30 block, kind of after the market gets all the jitters out of the way and kind of, freaks out a little bit, right, when Jerome Powell takes the testimony. So tomorrow morning, we're going to open up our trade room at 8 o'clock Eastern time. Don't be late tomorrow. We're going to look for our trades early. we're going to sit on hands around 10 o'clock. And, hopefully I'm wrong. Hopefully the market barely reacts to it, but that's not usually what happens. We usually do see quite a kind of panicky kind of personality in and around those few minutes that he takes the microphone. And then again, give it, 15, 20 minutes afterwards. Think about 10:20, 10:30, 10:40. That's where we oftentimes see some of the real nice moves on a kind of a testimony day for Jerome Powell. So that's the most important piece of the puzzle for tomorrow. We have a lot of major news here this week, though. We got CPI on Wednesday. We got some PPI on Thursday, and a very, very highly anticipated retail sales number coming on Friday. Next week is the FOMC announcement. So these are very, very big market moving events here, all at 8:30 Eastern time. So tomorrow's kind of the one day we don't have that major news at 8:30 Eastern time. And of course, we'll come back later on this week and we'll talk about how to trade the rest of the week's news report. So again, get in early or get out, either in early or in relatively late tomorrow, relatively late, 10:15, 10:20, 10:30. That's my game plan around that news tomorrow morning. Let's get back to our charts though. S&P, Nasdaq, and oil, my favorite futures markets, are all ready to go here. Again, like I said earlier, everything looks pretty darn bullish. Let's talk about why. Let's start off first here with the S&P 500. Now, of course, we begin the day with this complete bloodbath, right, running lower. We talked about this today in our trade room. We were expecting to see a pretty big move today in these markets because today is what is known as Reaction Monday. Now, what does Reaction Monday mean? Well, it's the Monday following non-farm payrolls. So we got that big surprising low number from non-farm payrolls yesterday. And so we come out this morning and we expect that a lot of the professionals, the bigger players in the market who are not going to mess around with that big news report from last Friday, they're going to come back in today and they're going to put their ideas to work on that Reaction Monday. There's a Reaction Monday, the Monday following non-farm payrolls. There's also a Reaction Thursday, which is the Thursday following the FOMC announcement. That'll be next Thursday. So might want to mark that down on your calendars. Bottom line, though, is we were expecting a big move here. I obviously didn't think it was going to go that far. We expect to see some pretty good movement here today. Market takes off to the downside. Ultimately, right, they basically completed a measured move, right, and then reversed and ran higher. The key right now, though, is this is a ton of momentum here for those buyers, and you have to think anybody who sold the open here today, you got to think their stops are sitting right above those highs if they haven't done so already. If this market keeps on going higher, you got to think there's potential this thing could really short squeeze as those sellers get squeezed out of their positions, and this could really escalate. It could really accelerate, I should say, right, as we go higher here. So we definitely have a very strong move for the bulls. Anytime we see a really strong move like this, we know that buyers are going to be loving on any opportunity right now to buy a pullback to a support zone. We also know with that high of day up there, and again, that short squeeze, we want to be open-minded to getting a little bit more aggressive on entries as the market goes higher, because you can see we got the high of day lined up with a measured move. We also have this juicy range target just below 4,700. That number should sound familiar because, of course, that is the range we pretty much finished up the week last week, right? Ranges are magnets. So big move down. It just seems almost a no-brainer right now for this market to make it at the very least back up to that 4,700 for the buyers. Or maybe at the very most here, right up around that 47.23 and a quarter area, which is kind of that big bounce, right, off of that low last week. Now, one thing you do want to keep in mind here for tomorrow is that whenever we see a really big move in one day. This is a really big move, right? I do realize it was all down and then all back up. But whenever a market runs a marathon like this, you have to think the following day they might just take the day off. And so we may see some ranges develop. Anytime I see a big move in one day, I always think, okay, the following day, the market may need to kind of catch its breath, if you will. And when you think about tomorrow being, kind of a Fed testimony day with Jerome Powell at 10 o'clock Eastern time, it wouldn't surprise me, if we do see a little bit of a range-bound market. So we're going to make sure we're ready for that as well. Really at this point, the buyers have all of the momentum. But as I mentioned earlier, I wouldn't necessarily count out those sellers, because I'll tell you, there's a trend line coming up here. If the sellers if they can get their hooks in this thing, again, there's that big move down. You got to think the bears would have a pretty easy job convincing themselves if this momentum can turn and make a run back down to those lows here. So I really do have some pretty high hopes for tomorrow and the rest of this week. This nice big range on a Monday is always nice to see. So I'd love to buy a pullback. If that pullback turns into a reversal, we can short this thing back down to retest the low. I definitely do want to keep an eye out for a range up here. And of course, if the market keeps on running higher, I get a pretty good idea of where this market wants to go, right? That 4,700 should be a pretty easy milestone or objective for those buyers. So, real quickly here, let's talk about the pullback. Now, last week, we talked about 4 different types of pullbacks, right? We talked about 4 different types of pullbacks. We'll talk about those here tonight. Let's talk about a couple of them in the S&P, and then we'll talk a little more about the different variations of those pullbacks as we go deeper into this video, right? So make sure you watch all the way to the end. The most important thing right now is the strength of this move. So really any shallow pullback right now, really any shallow pullback here, if I can get some sort of trap entry, right? So we pull back, any type of shallow pullback right now, I can use what I call a trap entry, right? Traps are pretty, they're pretty straightforward, right? When the market runs higher like this, we look for little tiny entries right below, right, prior swings here. So we got a lot of momentum going higher. If I can get a relatively shallow pullback, you know what I mean? I'd like to get us down around, the low of that channel. If I can't though, shallow pullbacks are great for what I call trap entries, right? So looking for a trap entry if all we get is a shallow pullback. Hopefully that's not all we get. Hopefully we get a bit of a deeper pullback. On a deeper pullback though, now what I can do is I can look for one of these combination setups. I can try to rope in the sellers below the moving average. Once the bears get short below the moving average, all of their stops are going to be sitting ducks, right? And because we have all of that momentum for the bulls, it's just very easy when the market pulls back below the moving average, like it saw back here, strong move up, pull back below the EMA, rope in those bears, and buy into those stop losses. You'll also see a lot of combination setups. In other words, we'll see a failure setup into a pullback setup, right? And that is we rope in those bears with a failure, right, buying the stop losses, and then one of my favorite kind of add-ons, or if you don't take the failure, you can grab that follow-up entry, which is basically that first touch, right, the first pullback to the moving average. Just like here, strong move up, shallow pullback, right, trap in those bears, and grab that first pullback. So a failure into pullback combination would definitely be something on my radar. Now, at some point, this market may turn bearish, right? Now, there's a couple other pullbacks I'm going to talk about, but I'm going to talk about them on the Nasdaq, all right? So make sure you keep on watching, right? I've got 2 of the 4 pullbacks covered here right now. One, again, is a shallow pullback trap. The other, of course, is going to be that relatively deeper pullback, but not too deep, right? That failure into that pullback, right, combination. Now, at what point does a pullback turn into a reversal? Well, there are quite a few different types of reversal patterns. One we'll talk about here on the S&P. Another one we'll cover right on the on the Nasdaq. Let's say now we do get that pullback. Let's say the bears now, they do sell off the moving average, but instead of failing and giving us a buys trigger going higher here, now those bears explode off that low. We call these 1, 2, 3 reversal patterns. 1, 2, 3. Now remember, guys, we can't trust that first pullback. It's too strong going higher, right? We have to wait for the sellers to come in and hold off the moving average, right? If the bears can come in here and 1, 2, and jump off the moving average, now we get a pretty easy job. Now we're going to go try to find a short. We're going to mark off that low. I'm going to mark off the high, right? See how we kind of find a channel? We mark up the trend line off the low. We mark up that trend line up around the high. And what I always do is I try to find a way to get in off the high of that channel on the first test, right? The first test. Now, there's a lot of different ways we can enter that trade. I talked about earlier how I like to use traps. So one of my favorite ways to do this is once we get that 1, 2, 3 move lower, now think about where that prior swing is or where a prior swing kind of lines up at the high of that channel. Think about that trap. Remember, you want the first test, right? Trap pattern, failure pattern, pullback, combination pattern, right? Trap, failure, pullback combo. Now, guys, obviously, I'm just simply drawing on the screen right now, but I'll tell you, I have hundreds of examples of how we apply these 1, 2, 3 reversals into first channel tests, right? Traps, failures, pullbacks. You'll learn all the rules for these setups, lots of examples of how we apply them in our trade room. I'll put a little link up here for our quick start class. We have a free trading course on the website. If you're like me and your goal is to earn daily income in these markets, if you're a day trader, that quick start trading class will give you an easy roadmap to follow, including, of course, the rules we use to qualify the actual entries. Okay, so now we get a pretty good idea of how to trade this thing as it pulls back, right? We know we're looking for a pullback. If that pullback turns into reversal. Now, again, I've only covered a couple of those pullbacks, only one of those reversals here. So we'll talk more about that as we go into the Nasdaq here. Next up here, though, what if we go sideways? What do we do if the market goes sideways here? If the market turns and starts going sideways, this is a very likely scenario at some point tomorrow. It may not happen, though, until we get all the way back up into that trading range. But if we do see the market go sideways, right, into a trading range now, what do? We find levels of support below the range, right? Levels of support below the range. That's what I always do. Once I find that range, I then look left and think, okay, where can I find some levels of support? Because what you want to do is you want to wait for, eventually what will happen is the buyers will run out of bullets, right? They won't want to keep buying anymore. So what we do is we wait for the pullback below the range. We trap in those bears with a failure down around a support level right below us, right? So we don't just simply try to pick the bottom on this. What I do is I wait for that pullback. I find my level of support. I wait for those bears to come in and commit to it. And once they do, again, think about where their stops are, right? Think about all of this momentum. It's a bull market. You're at a support level below the range. It's a great way, right, to grab a nice, easy winner going higher. And then there's one more trade I always look for, and that is, we know that ranges are magnets, and we know that the market in a range loves to rotate, right? So imagine now we go below the range. We're usually going to end up around the same distance on the other side of that trading range, right? So that's where the market wants to go now. Now find a new channel, and as I mentioned earlier, right, grab that first test. So again, it's going to be your failure, right? And then this might be a trap setup, might be a failure setup, might be a pullback combination. We want to buy that first test. And again, I'm not going to go into more details about the actual entry triggers that we use in the trade room, but I do cover more of that stuff, right, in that free quick start class. So that's how we're going to trade this thing if it goes sideways. Now, what if we keep going higher here? This there's a couple different ways we can look at this. Again, this very likely right now, this market tries to keep going higher here. Here's one thing you kind of want to think about here right now. If the market was to keep on kind of grinding, this is very common whenever we have sellers who might be trapped short over here and they're getting out, right? This is kind of a short squeeze. What you want to do is you want to really draw that channel nice and tight. Draw it nice and tight, right off those highs, right? Don't worry about the bigger channels out here, right? Worry about right off those highs, right? Those grinding higher highs. Then, once you got those highs lined up, now find that channel, right? So now find that channel off those lows. And then again, think about where you can find a prior swing. Get underneath that prior swing, and that's going to lead into that trap, right? Into that failure, into that pullback combination. I'll tell you, these are really, really reliable trades there. Grab the trap, grab the failure, grab the pullback, right, combination. I would also say too, that let's say, for example, that we do get that really shallow trap, right, that I mentioned earlier. Remember I said earlier, right, shallow pullback trap? Let's say we do get that shallow pullback trap, right, and the market runs up like this. Okay, that's another easy way to find a new channel. I'm going to mark up the high. Again, don't worry about these larger channels. Okay, there's too much potential for a nice big bull run here. So grab off the high, right? Grab off that low. Again, drill down to your faster time frame, right? And grab that first test off of that low. This is a 7,000 tick chart here on the E-mini S&P. We're not going to trade a 7,000 tick chart. We'll drill down to a faster time frame, and you'll learn more about that in that free video class. All right, guys, so we got a pretty good idea of where the market wants to go. We got a pretty good idea of how we want to get into this thing as it goes. One of the big questions for tomorrow, though, is where will that range show up? You know, it's probably going to happen at some point. Will it be a reversal and the range is down here tomorrow? I don't know, right? We'll have to wait and see what we get. Let's keep going. So S&P's pretty straightforward. How about some Nasdaq? So Nasdaq's in a really similar situation. There are some pretty big differences, at least in my opinion. We definitely saw something similar, right? Nasdaq opens up with a big move down, right? We pretty much get a measured move going lower into a reversal. It does look like there was a range down there, right? That range, of course, will act as a magnet. Just like the S&P though, right? We get this nice 1, 2, 3 reversal, and the market just simply keeps on, right, running. We have to assume with all of this bullishness running higher right now, we have to assume this range overhead, right? This range magnet, which again, just like the S&P, is going to be an easy target, easy objective there for those buyers. We have to assume, right, that 16,000 big round number would be a nice easy target for the buyers if they can get through this measured move and get through this trading range, right? We get that measured move waiting up there overhead and a very strong run, right, for those bulls. So we have to assume right now that buyers will be willing to get pretty aggressive if this thing starts to show signs of a short squeeze. We have to assume that buyers would love to buy that pullback because after all, anytime we see this much strength in one direction, everybody wants to buy the dip. We also know that if sellers can get around this trend line, this is one of the big differences between the Nasdaq and the S&P. The S&P had this, the S&P has this very steep trend line, right? See, the S&P has that steep trend line. Steep trend lines, right? This one right here. This is not going to be that difficult for the sellers to hold and get below it, right? It won't be that difficult. The Nasdaq doesn't have really that. I shouldn't say it doesn't, but you'll notice it's going to be a lot more difficult. This, in my opinion, really gives the buyers a lot more options here. It also, I think, as long as we can wait for the proper signal, will allow us to use that trend line if we do get that reversal. So I really do think the Nasdaq, even though there's probably a little bit more advanced tactics needed, I think the Nasdaq probably has a little bit easier, or let's say this, more opportunities, right, than the S&P for tomorrow. So that's kind of one thing I see on my radar here. Now, On the S&P 500, we talked about a bunch of different kind of scenarios right now, right? We talked about that shallow pullback trap, right? And how anytime we see a real strong move in one direction, we may not get that deep pullback down to the low of that channel. And if that's okay, right? It's okay as long as we get that trap entry before we retest the high. That's not a bad trade at all. We also talked about getting underneath this channel, right? Underneath the moving average, trapping in those bears, right? And using a failure into pullback combination, okay? And that's pretty easy. But what if we really tumble, right? Again, I like the trend line down here because it just kind of gives us a little bit of protection. Now, it's probably a little bit too much of a pullback to call that a trap entry. Traps are great when you have a relatively shallow pullback. You know what I mean? Like that would be a great use of that swing low for a trap entry. Yeah, this one's might not be, might be a little too much, right? So we end up running higher all the way back. Yeah, that's probably not going to be the right trap entry to take. What I'll do is, if we really get a deep pullback here right now, we've already talked about 2 of the 4 pullbacks, right? So here's one that you want to think about. If the market really pulls back nice and deep, you got that trend line in the way, it's almost like protection, right, for those buyers. Now, if we see a really deep pullback, don't you think you're going to see a lot of bears coming in and trying to short this thing back down, right? I mean, everyone's talking about the COVID cases rising. They're going to be raising rates at the Fed, right? It's been a bear market down. The Nasdaq's had the worst start to a new year since the dot-com bubble, right? So you have to think this could easily have bears coming back down. So if we do get that really deep pullback, I've got to be careful. What I want to do is I want to use the 2-try rule. Right? Let those bears try once, let them try twice. Okay, now once I see those bears try twice, and again, forget about what we think the market might be trying to do. If we get a really, really deep pullback, we have to respect the market's bearishness, the momentum for those bears. So let them try once, let them try twice, and what I always do is I always try to put myself in the shoes of those sellers in this case and think, okay, at what point would I think I'm wrong about that trade? And it would be right above those highs here. And so what I always do is I love to look for trap entries, right below that low, right? Get a nice strong signal candle. That will be a tough trade to say no to. Right? It's a strong move down, bears try once, bears try twice, trap below that low. Or, sometimes we don't get that trap, and all we can do here is just simply buy right into those stop losses. So we got to we call these 2-try failure patterns, right? Off a support level with a big bullseye right back up to retest the high. Now, one thing I always encourage our students in the trading to look for is after we get that real deep pullback, and you get that kind of, mini short squeeze, think about now how a trap might be involved, right? Think about how a trap could be used. Because oftentimes what's going to happen is when you get those really, really deep pullbacks like that, right, you'll get the failure. That's kind of the easy one in my opinion, if you know what you're looking for. And we'll do it together tomorrow morning, obviously. But if the market really starts to punch going higher, right, wait for that trap, because those traps are going to make it easy for you to get in at a nice low price, even as the market runs higher, right? So a 2-try failure into a trap. And again, you'll learn a lot more about the rules we use, the checklist we use in the trade room. As part of that free trading course, you'll see, a lot of examples of how we apply these types of setups to our favorite futures markets. Now, I also mentioned there's one more pullback, and that is a 2-legged pullback. So now what you want to think about is if this market bounces off the moving average and then rolls lower like this. At that point, what you want to do is you want to draw that trend line right down overhead. Then you got to be careful, right? You don't want to take the failure right into that trend line. You want to go up, over, and use it. These are, like I mentioned earlier, these are a little more technical. They're a little more advanced, but I think you can handle it because it really puts you in a really great spot. We call these 2-legged pullbacks, right? Or 2 LPs, 1 leg and 2 leg. And usually one of the giveaways is the bounce off the moving average. Bounces and then rolls over. Draw that trend line down. And the key is not chasing it as it goes, right? Buy that up and over. Now, what if it doesn't give you that up and over, right? What if it doesn't? Sometimes it doesn't. Sometimes it just rips and runs higher. That's exactly where that trap setup will come in again, right? We're not going to chase it. We're going to grab that trap. So, hey, maybe we don't get that up and over, right, in that two-legged pullback if we want. Maybe all we get is that trap. We don't need to catch the entire move. We just want to grab a nice big chunk of it, because one of the nice things about futures trading is leverage. I can use a small amount of capital to control a whole lot, right, of that position. Okay, so now we get a good idea, right, of how to buy it as it pulls back. But remember what I said earlier, this trend line could also be used as an area of resistance. So let's say, for example, now, right, we run lower, we hold that pullback, right, and we jump off the moving average. What do we call that? We call that a 1, 2, 3 reversal, right? Okay, 1, 2, 3 breakout, 1, 2, 3 reversal. Now, mark up that low, mark up that high, but now, right? That trend line, that's the sweet spot, right? That is the sweet spot for it. What you got to kind of be careful with is on the reversal, if we run into that trend line and kind of chop around a little bit, right? We still have to get that strong move down. And what oftentimes will happen is you'll start seeing new channels, you'll start seeing new traps. And just remember, what you want is you want the first test right off of that new channel. Okay, if it struggles there for a while like that, it's not a reversal yet. We can't sell that right just there. We got to get that jump and run lower and then find that new channel. Again, I'm just simply drawing up some ideas here. Find that trap, find that buyer failure, right? And get that short going back down again. Just like on the S&P, if the market is going to go sideways here, right, we're going to wait for that pullback. We're going to rope in those counter trend sellers with a failure. We're going to grab that new channel and grab that first pullback. Same thing as we talked about on the S&P, right? We take the amount we go below, the amount we go above. We know where the market wants to go now, right? We wait for that, right, that failure. We don't need 2 tries at that situation because it's not a very deep pullback. Just 1 try, right? And then, of course, maybe it's a trap, maybe a failure, maybe a pullback combo, right, as we go. Same thing applies if the market runs higher. If we continue to kind of, short squeeze, right, as we go, I can draw that channel, grab that trap, that failure, that pullback combination. I would also anticipate, because we have that range, one more kind of a long trade as we go. Let's say, for example, the market was to, right? Let's say, for example, the market was to keep going up a little bit here, right? Pulls back and higher high. That would be a fantastic 2-try trap setup, right? As we go. I don't need a channel, but if I could find a new channel like that, yeah, that's the good stuff right there, guys, right? Get underneath that moving average, just below a prior swing, grab that failure, trap, right, and that pullback combination. As you can see, I'm not a big fan of chasing the market as it goes higher, right? Let the market go higher, wait for that pullback, grab your trap, your failure, your pullback combination. And again, we'll do this stuff together tomorrow morning, right, in our trade room, so don't miss it. Let's keep going here. How about some crude oil, right? The black gold, the Texas tea. What do we got going on here on the oil futures? You could definitely see, boy, what a difference. Yeah, what a difference a market can make, right? S&P and Nasdaq are ripping all over the place, and the oil seems like it's got its shoelaces tied together, right? And it's stumbling around, right, back and forth. As I mentioned, in the introduction, even though the oil market has clearly ticked lower today, it just doesn't look good right now for these bears. The bears really don't have a lot of options for us until we start getting at least another leg lower. Here's why I say that. You can see what happened here today. The market begins in a trading range, right? It's basically a bull bias into that trading range, right? We, of course, now are looking to buy it back up into that range, and you can see that was not very successful. It was successful, but it wasn't enough to really get that pendulum swing on the other side, right? We see a very strong move down, right, about 8:30 this morning. That strong move says expect a retest of that low. We call these open loops. Now you'll notice what happened, right? The bears get their retest, right? But now look at this price level right there. It's almost like, they were able to go through it, but they just couldn't quite get through it. So in my eyes, really this whole area right here is just a really sturdy area of support. On top of that, you throw in this rising, right, this higher low on this, and you really have a very difficult time wanting to get short into this area, right? You can definitely tell how that's kind of setting up right now. It looks like this level right there at 78.15 is just a little bit too strong for these bears to break through. So we can tell we're sitting at a major level of support right now. At the same time, there's also a range right here. And if you've joined our free trading course, right, or if you've taken my membership classes here at School of Trade, right, my professional classes, you know that ranges love to rotate, right? So the market rotates down, rotates up, goes down, up, down, up, down. And now we should anticipate this market now wanting to rotate higher. Now, how much do we anticipate the market to go higher? We anticipate about the amount we went lower. So we have to think now we're not only sitting at a major support level, but if you understand how ranges work, we should now be in the mood here for a rotation going higher. Now, obviously, a lot can happen overnight, so we'll see what happens. Like I said, doesn't look good right now, but the bears may be able to hold this. I'll talk about that in a second. So we do anticipate these bulls having the ability, right, to go higher right now. And then what will that do? That'll put us right back in this range overhead, right? Now, think about it. Right? If we're a range-bound market and we run lower and we start to run higher here right now, is this a good place to sell short? Definitely not. Absolutely not. Why? Well, because momentum will swing, right? It's really just like this situation or this illustration that we talked about earlier, right? We're bullish into a range. We go below the range. We rope in those bears with that failure. And what do? We don't get short at the top of that range. Are you crazy? No, we trade through it, right? We look for that turn, right? In other words, the market has potential now with the bears trapped on the wrong side to slingshot and run higher. This is why I think the buyers have a very good opportunity. Yeah, we're still very bearish right now. This is not a bull market, but I definitely can see potential here for a nice buy as this thing potentially runs all the way back up to that 79.80 area. That would make a lot of sense. That area is that big range, right? Think about it. Big move up into a trading range. Would it make sense, right? This market kind of grinding down here. No real strong run. You know what I mean? Look at how strong the bulls were there. Do the bears look anything close to that right now? Not even close, right? In fact, a lot of folks might look at this and say it's a flag. It's a bull move up, a choppy move down. A lot of folks may see this and go, you know what? It's only a matter of time before they snap back up to retest those highs here. So it definitely does look very bullish right now from my point of view. The sellers, they do have a chance. I'm not going to sell into this move as it goes higher, though. That's going to be a little bit of a tough one to sell into. If we can break down, though, there is another big level down here, another big range down here. So we'll say 76.80, right, is going to be the top of that range. 76, of course, is a nice, big, juicy, round number here. So really, it all comes down to how do I buy it? How do I sell it? If the market runs higher right now, this is absolutely where we can look for kind of that slingshot reversal, right, going higher. What I want you to think about is how we can find maybe a new channel, right, as we're going higher here, right? Can I find some new channel like this, right, and grab that first test off of that low? That's kind of what I'm looking for here as we go. We've got this trend line coming up. The bears have very little to stand on, right, as the market rotates higher. So this is kind of one of the situations we're looking for as we go up. If the market really starts to push, right? We'll definitely start to get more aggressive with steeper channels. And again, as the market rolls higher here, I can try to sell this, but I really got to be careful. As the market rolls lower, I can buy off of that low because after all, there's a range mag in the middle. If the bears can hold it, we can take it down into that 77, 76 range that we talked about earlier. So as we go higher here, right? If we go higher here, think about how we can draw a channel, maybe off that little swing right there, right? So think about how you might draw a channel like that, right? Market might start to run going higher here. A lot of momentum going higher. We know where the market wants to get to. Can we get that? Can we get that channel test, that trap, that failure, that pullback combination? As you can see, that will be a great spot for it. Get in before we finish off, right? That pendulum swing. If we do make it up into that pendulum swing now, right? Up into that pendulum swing, can I sell that area up there? I definitely can. But what's my concern though? It's a great location. What's my concern though? Momentum. And I've got a really obvious trend line right there, right? So how would we sell off the top of a range when we have A, a lot of momentum, and B, a support level in the way? We're going to have to use two of the principles we've already talked about already. One is the two-try rule, right? In other words, make the buyers try twice. And the other are going to be traps, baby, right? Well, it's just traps, right? The baby part is my part, right? So it's called a trap. So in other words, we're going to use those two together, right? We're going to let the buyers try twice because, of course, we want to make sure we give them the benefit of the doubt. And we're going to look for a trap entry because traps, of course, are going to be your favorite entry. Well, not just this sample. I love traps to begin with, but a trap entry is great because it keeps you out of trouble. You're not going to be selling into that rising support trend line. So that's how I would sell it as we go back down, right? Of course, mark up that high, mark up that low. You know where the market wants to go on the opposite side of that range. Now we mentioned this earlier, right? Let's say, for example, this thing really starts to push, right? Let's say it really starts to push, right? Market begins to run and begins to grind. Now you want to get aggressive, right? We push through the pendulum swing. Broken pendulum is usually a pretty good sign. We have some sort of short squeeze going on right now. Again, grab those traps, those failures, those pullback combinations. Or maybe we see something like this, right? Where it pops up, holds the pullback and jumps, right? We find a new channel. We drill down to our faster time frame, right? I'm not going to repeat all the setups again, right? But you get the picture. Find that new channel. Remember, the key on this, the real big key is get me through that pendulum swing. If you can get me through that pendulum swing, that will not only break down resistance, but it will give us a ton of momentum. And anytime we see a lot of momentum in one direction, we know the odds are almost guaranteed we're going to retest the high. Right? That's a great way to look at it, right, as we go. I could also use a two-try trap, right? So strong move up, right? Strong move up completes the pendulum swing. Shallow pullback drives the buyers crazy. Buyers want to buy that pullback. They don't get it. The higher high confirms through the pendulum swing, and now we go in and we grab that first test, right? That trap low. Two-try trap. Lots of different ways we can trade this. Again, if I can get into it early, I can do it before the pendulum swing. If I get it late, I want to go through the pendulum swing. Either way, find that channel, find those traps, those failures, right, for that long going higher here. Now, if we go sideways, stay out of the middle, right? Stay out of the middle. If we go lower, can I buy this right now? I definitely can because I'm in a good location with the range above me. But what's my problem? My problem is momentum, right? And my problem is that trend line. Do the two-try rule, right? One try for the bears, two try for the bears. Grab that trap because, again, that trend line is now in your way. Make sense? We have, again, a bear momentum, right? So being a buyer says use the two-try rule. And we have an overhead trend line, which means use that trap, right? Or as I always say, traps, baby, right? I love traps because they're usually some of the biggest winners we get, right, in our trade room. And then if those bears, if they can hold it, right? If they can run it lower, if they can buy, right, not by miracle, but if they can hold it, right? Didn't hold it there, Didn't hold it there, right? Will they hold it right here? Remember, it doesn't matter how strong that first leg down is. They have to hold it and they got to jump, right? If they can jump, and again, doesn't look likely right now, but if we can get that 1, 2, 3 breakdown, right? Get those bears to hold that pullback. Now we can drill down to our faster time frame. We can find that new channel and we can make darn certain that we don't miss whichever one of our price action setups triggers. We want to be ready. We want to be ready for that, right? As we go. Another breakout would be a breakout pullback. Think about this area right here, right? Think about a really strong move down, right? Really, really strong move down. You find your channel, right? You go looking for the short, but you don't get it, right? And the mark comes all the way back up. Remember, anytime you see a really strong move, right? There's a bullseye right on that low. Think about this area right here now. Okay, get back above the moving average. Get those buyers to come in and try to get long. Once they do, again, all of that momentum, overall bearishness, that's a great looking spot there for kind of a breakout pullback, right? I don't just automatically sell breakout pullbacks. I always incorporate one of my 4 price action setups. And again, you'll learn more about that stuff in that quick start class linked up in the upper right-hand corner. And guys, don't forget, I've covered a lot here tonight. I'll put all of the important links you guys need, including a membership link, so you don't miss tomorrow morning's trading session in the trade room. We open up every morning at 8 o'clock Eastern time. I'll put that link for you guys right in the description of the YouTube video. All right, we're looking pretty good here. Very excited for tomorrow. Again, we get a bunch, well, not a bunch of news, but we get some pretty big news at 10 o'clock Eastern time, so get to it early or get to it late. No matter what, though, don't miss tomorrow's trading session. If you guys have any questions for me, don't be afraid to call the office. I'll leave that phone number right there. Don't let my ugly mug, right, scare you away. I've also got questions in the comment section below, so don't be afraid to drop a question in the comment section below. And I hope by now I've earned a thumbs up on the video. Maybe you subscribe to the video as well. And don't be afraid to share this information with a friend. One of the nice things about trading is I can share as much as I want here on this video. You can share it with your trading friends, right? And we can all succeed together. All right, guys? Now get out of here. Enjoy the rest of your evening. Got a big game on tonight, right? Will the Clemson Tigers be able to take out the Alabama Crimson Tide national championship game tonight? Who you got? Let me know in the comment section below. I'm an underdog guy myself, so I got to say I'm rooting for the Tigers here tonight. But who you got? Would love to hear in the comment section below. If not, we'll see you guys tomorrow morning at 8 o'clock Eastern time in the trade room. And of course, we'll see you guys tomorrow night. We're going to keep these videos coming so you're ready for the best trades each day the second week of January. Guys and gals, that's it for me. Have a wonderful rest of your day out there. Be well out there. Be nice to each other, will ya? And be here next time, all right? Adios, amigos. Bye-bye for now.